am so happy that the market's been up the last 3 days. I don't know if you know this, but financial advisors, I think, feel the market downturns maybe even more than their clients do. I mean, I really hate what's going on right now in the markets, that it's so unsettling for people. And right now, I think it's very confusing what's going on, so I'm going to try and make some sense of it. So, first I'm going to give some truths about stock markets. Okay, so stock markets drop. They're volatile. It's not like investing in a CD where you know what you're going to get. And you all know that, right? Mm-hmm. Okay. I'm very fortunate. Most of my clients are very sophisticated and understand that. But I think right now it's still unsettling. So I want to go over some statistics that will show you that this is very normal circumstance. So this index, I chose this index because it's a world index made up of U.S. and international stocks, which is how all of you are invested. You're not just in the S&P 500. You're in the S&P 500, but you're in international too. So let me just see if I can show you the most important thing here. So you can see horrible returns, right? -6 for 1 month, -8, -5, -6. Over 3 years, though, the return's 6%. And then over 5, still 6%. Goes down over 10 to 4.4. That's because now the 10-year is taking into account the credit crisis market and this market. And then, but then over the longer term, still 6.7. So this is a reason why you stay invested even in the bad times, because you're going to get these 6% type of returns instead of the returns of the CD market. So this is how many times there's been a decline in the market and the average loss. This is very typical of stocks. They're going to go up and down and up and down. And this gives you some good statistics on that. This chart is really great. This shows you, okay, so the red numbers show how far the S&P, this is just focusing on the S&P, but how far it went down in a given year and then where it ended up. So if you look at like 2015, it went down 12, but it ended up down only 1. And every year you can see things like that. It went down 34 and ended up 23. This is 2008, the worst year ever. 2010 was down 16 at one point, ended up down up 13. So right now we're having a tough time, but that doesn't mean that it's not going to end up by the end of the year. It's very typical to have that kind of volatility. It's really hard to predict those kind of things, which really do affect what goes on with the stock market. Most investors think you make all your money in bull markets. This is really critical. It really is that you stick with it over the long term. You've all heard that mantra about staying with it over the long term, and it's really true.